Too many moving parts in the market. US banking and also rate outlook as well as finance bill changes. And a weekend ahead keep the stocks range today. IT ekes out gains while metals slip in trade.
Accenture's strong 9% Q2 growth and order wins of $22 billion provide a fillip to Indian IT stocks, even though a lower guidance band and proposed layoff of 19,000 employees point to some demand moderation.
In amendments to the finance bill, they do away with the indexation benefit and lower long-term capital gains tax on debt funds. The move to tax gains from debt funds at the slab rate hurts the AMCs.
The proposal of life insurers to relax the taxation impact on policies with annual premiums of over rupees 5 lakhs gets a snub, but a change in the taxation of debt funds gives a fillip to insurance products.
Hello and welcome. You've tuned into Business Lunch on Friday afternoon. I'm Nisha Podar, and with me as always is my co-anchor Pavitra Parekh. So Pavitra, it's a shade of red in the market. Tentativeness really continues in the market at this point. And of course, there are many global cues to really digest for the market. But Nifty 50 holding stable above the 17,000 mark. It's a very tight range and it's just off the high point of the day by about 60 points, but stable with a negative bias. When we talk about Bank Nifty, that too is flattish in trade today, while the mid caps are the ones which are really taking the brunt of the uncertainties around. So therefore, more than 0.5% down on the mid cap universe. And that's the weak spot for the market today. And therefore, the advanced decline ratio is in favor of the declines. When we talk about some of the big heavyweights, well, Reliance Industries continues to be putting pressure on the market. Along with that, the Bajaj twins on the finance side, some of the metal names are the weak links in the market. But still, there are some good gainers in terms of percentage. Apollo Hospitals, Kotak Mahindra Bank, along with Infi, TechM, TCS. So the IT pack doing extremely well today, and some of these counters in terms of percentage doing far, far better, Pavitra.
Oh, absolutely. So that's the market action. But the real story today is really what's happening in the mutual fund space. I'm going to just cut straight to that because the Finance Bill 2023 amendment says that mutual fund investments, when not more than 35% is invested in equity shares of Indian companies, will now be deemed to be short-term capital gains. They will be taxed as short-term capital gains. This applies to investments made on or after April 1st, so not on current investments, and impacts flows into debt funds mostly, but also gold funds and international funds. We've been speaking to experts through the morning to really understand the impact of this move, and everybody agrees that this has just come as a full body blow to the debt category of mutual funds. This is in fact applicable beyond the debt category, like I was pointing out, to gold and international investing as well. So what experts are saying is that the indexation advantage was one of the key reasons actually why someone would choose to invest in debt, in gold or in international funds, right? So taking that away, of course, comes as a big setback. Further, not only is it proposing the removal of this indexation benefit, but these funds will also be taxed at the marginal rate, which means the current slab rate. Experts believe that in this context, when you have this benefit being taken away, money could now move to sovereign gold bonds and back into FDs and NCDs as far as debt is concerned. Also, another point to note, and I do want to point this out, is that retail investors are currently not that big in the fixed income category. We do know that it is largely institutional clients as well as HNIs who will be largely hit, and they will suffer most of the impact. So that is what really comes through from experts on the impact of this move. But everybody agreeing that this is quite a setback to the debt category of funds. But let's listen into what some experts had to tell us when we spoke to them on all of these amendments that came through in the finance bill. Listen in.
The larger purpose that it caters to the market, in addition to the development of the market, is when the price discovery mechanism have become more efficient because of the larger participation coming from the mutual funds over a period of time. And mark to market, there's a mark to market, therefore nobody of course gets any return which is a linear kind of return or guaranteed kind of return, unlike FDs. But definitely it helps over a period of time generate the return on the base of the investment that is being made across credit maturities, across credit profiles, across maturities. So therefore, first and foremost, it came as a surprise given the fact Nothing was part of the budget discussion. As a result of that, hybrid funds would become the way of the mutual fund. That could definitely come.
35% of the debt category is in this category. It's still 65% in the category where people are putting in money. Indexation was one of the biggest benefit. But if the yields are good, especially the new categories which are emerging like target maturity funds, overall impact is the retailization of debt will definitely get impacted. Because this was a category where actually real return, this was the only category where we were able to talk about the real returns to the investor.
Therefore, people will evaluate a fixed deposit with a bank, a fixed deposit with a company, a debt market fund, everything on par, and sort of not factor any tax advantage in any of them. The new amendment is supposed to come into effect for purchases made after 1st April. So current ones continue to enjoy that benefit.
All right. So those changes, really experts giving their view on the impact. And earlier today, we also spoke to a corporate. Well, Sheshagri Rao, the joint managing director and group CFO at JSW Steel, says that corporates will now have to take another look at routing the capital to debt mutual funds. Listen in.
Mutual fund is an avenue as far as the corporates are concerned to reduce their tax burden. In my view, I think they have to relook as regards to the overall routing of funding by corporates through mutual funds. So if this arbitrage is taken away, then not only the mutual funds will not be able to deploy these funds, but the corporates also will not be able to comply with this restriction, with this condition. So therefore, I think Government of India has to look at as regards to the taking away the capital gain tax benefit, indexation benefit.
All right, those are some reactions coming in. But for life insurers, while there is the disappointment of no relief on budget proposals, the mood is upbeat after the government has changed indexation norms in debt mutual funds. So Yash has spoken with all of the top insurers to really make sense of what kind of impact that they could see over here. Yash?
Well, Pavitra, as you rightly pointed out, there's disappointment certainly for life insurance companies, but this disappointment is also a blessing in disguise for them. I'll tell you exactly why. First, to speak about the disappointment, insurance companies had asked for 2 amendments on the budget proposal of taxing long-term savings life insurance policy. One was to increase the threshold of 5 lakh, which was determined for that taxation, maybe increase it to 7 lakh or 10 lakhs. That hasn't happened. And the second demand was to give indexation benefit when it comes to calculation of this tax on long-term savings policies. That also hasn't come through. What is the blessing, what is the positive which has come as far as the budget amendment is concerned? That is the move on not giving indexation benefit in terms of taxation on debt mutual fund as well. There are 3 important reasons why this becomes a positive. The first one is better internal rate of return for life insurance policies, specifically the savings long-term life insurance policies. The long-term savings policy have an IRR of about 6.5 to 7%. IRR for debt mutual funds is anywhere about 60 to 80 basis points lower than that. Now, with taxation on these life insurance policies, that arbitrage of 60 to 80 points would have vanished, and these debt mutual funds would have become more attractive than life insurance companies. But now, with no indexation benefit coming for the debt mutual funds as well when it comes to taxation, these arbitrage of about 60 to 80 basis points still remains in favor of long-term savings life insurance policies. The second one is disadvantage of reinvestments. Now, these long-term savings life insurance policies are generally for a period of about 10 to 15 years, and the taxation gets calculated once at the time of maturity, which means at the 10th year when it matures or the 15th year when it matures. Whereas when it comes to debt mutual funds, these are 3 to 4 year products. So you have to pay tax every 4 years if there is a case of reinvestment in terms of the money which comes out of these debt mutual funds. Right. So that gets saved. Also, there is another advantage on the quantum itself of 5 lakh rupees for life insurance company.
Right. Thank you so much, Yash, for getting us all those important details. And we are still digesting the changes in the finance bill as is on the passage. And right now, the big news that we are seeing is that at least by 23 to 25%, the securities transaction tax has been increased by the government on futures and options trading. That's a big amount by which it has been increased, and it is going to directly impact the high-frequency traders. Mangla Malu is right here to put all that into perspective. Mangla.
Well, that's correct. You know, from 0.0017%, the STT or Securities Transaction Tax on options trading has been increased to 0.0021%. What does that mean? On a turnover of 1 crore rupees, the STT that you will have to pay per trade, which is the tax that you pay before getting into any trade, the Securities Transaction Tax, will increase from 1,700 rupees to 2,100 rupees. This is on options. And on futures, this has increased from 1,000 rupees per crore to about 1,250 rupees per crore. So that is a 25% jump in futures and 23.5% jump in options. And this perhaps could have been on account of the fact that, increasingly the volumes in index options and index futures has only increased over the last couple of trading years, so to say. In fact, I'm just looking at some stats yesterday, and yesterday was weekly options expiry, and in the index options, a total turnover was close to around 421 lakh crores. That's 4.21 crores in index options. Overall, yesterday's F&O turnover was close to 425 lakh crores. So we have seen a big increase in options trading, not just weekly options because of Thursday, there is Nifty and Nifty Bank weekly options expiry. On Tuesdays, we have the Fin Nifty expiry as well, and monthly expiry too, as a result of which we have seen a fair amount of options action in the F&O space. But importantly, this could also be a negative for a lot of these discount brokers. So I would like to see, the impact that it takes there is on, say, something like an ICICI Securities, 5paisa.com, because a large part of the brokerage volume has been generated by options trading and futures trading. So do they stand to lose some business or not is the big question.
All right, so the impact of this increase in the Securities Transaction Tax, Siddharth Bhamre, the research head at Religare Broking, joins us to put some thoughts into this and how is it going to really impact. Siddharth, by all means, 23 and 25% hike in STT for the options and futures contracts. It's a big increase.
Yeah, hi, good afternoon. So certainly if you just look at the tax point of view, then the increase is substantial, around 23 to 25%, as you are mentioning. This would increase cost of trading for a trader. But then if you look at the overall how F&O market has panned out over a period of time, how volumes have substantially increased, despite, exchange measures and regulators measures that you increase the lot size and hence you would restrict retail participant, but retail participation has only increased. So I believe the cost has gone up. This would impact marginally from short-term perspective on volumes, but overall I don't see, because of this reason, you will see significant dip in volumes.
Right. Siddharth, just wanted to understand your thoughts on the actual impact of this. Would you have any sense on the volumes that take place for ultra short term, say HFTs or high frequency traders, because those are the guys who play for very little return, and for them this increase would be extremely substantial and this would impact their return expectations as well. So what proportion of the total options trading or futures trading would be via HFTs, or would they be extremely out of the money options that they're selling which are for very little premium to benefit from this, and they get impacted by this increase? Would you know how much would be the overall proportion of that?
So if you look at, Mangalam, what is the high frequency trades now? The exchange gives the bifurcation, and the trades which are happening through algos, they are substantial. But algo can be a strategy also. Algo can be, as you mentioned, a very thin margin trades as well. So yes, there will be an impact on those kind of traders. Their margin might get squeezed. But then if IVs, you need to connect this with market dynamics as well. So these traders may not be getting highly impacted, or their margin may not get very squeezed if volatility is high and IVs are high. But in a low IV market, you would see that volumes might dry up, because anyway the premiums would be low. And if my margin also gets reduced, then the impact would be there. But in nutshell, I would want to say that the actual trading impact may not be very high, and even if it's there, it would be from short-term perspective. Retail will find their way to trade.
All right. Basically, 400 rupee increase on a crore on STT and 1,500 rupees on a crore of traded value on futures. That is the overall impact. So that stay with us. Rajesh Baheti of Crossseas Capital is also with us. At one point in time, in the futures and options market, there used to be, okay, I think we lost the line just in queue. We'll dial Rajesh back quickly. But this is, it almost feels like the day of the budget, right, guys? When
there's so many changes. We are again redigesting the impact.
You're finding out completely new things which were not there at all in the budget. And these are not, in a way, you can call them amendments because they are in that amendment document, but these are completely new proposals which are coming through. Rajesh is with us, I'm being told, of Crossseas Capital. They were one of the, at one point, very large contributors to overall sort of option volumes in the country. Rajesh, good to have you with us here. First of all, how significant is the increase according to you? I mean, we have the numbers, etc. And more on a sort of philosophical basis, what is the reason behind an increase like this, and what is the impact according to you?
So, Prashant, hear this. This is really funny. Somebody is going to get fired from the finance ministry soon, I think, because STT on options trading was hiked in 2017 from 0.017 to 0.05. Somebody's gone and taken that old figure of 0.017 and changed it to 0.021.
Oh dear.
So technically, as it stands, you might argue that STT has been reduced by 60% in options trading.
Wow.
So somebody has made this monumental error while drafting the amendments to the budget. So the way I see it, this entire discussion for the time being is meaningless because STT on options already stands at 0.05, which is 5,000 and not 1,700.
One minute. Rajesh, so, when we say that it has been hiked to this number, it is what it is already at that number, you're saying. In 2017, it was changed to that number.
It's 2.5 times that number already.
So this is basically much ado about nothing. Siddharth,
So they want to hike it, that's for sure. But the fact is they've forgotten that it was hiked 3x in 2017.
Right.
No, 1 minute. So you're saying that from just say that again, Rajesh. And you're sure about these numbers, right? You went back and looked at these numbers.
Yes. I went and looked and I checked.
So
and I was bewildered and I was corrected by others. So in 2017, the STT was on options was high from 0.017 to 0.05.
0.017
to 0.05.
Okay. In 2017.
5,000 per crore. Yes.
Okay.
And somebody has missed that out completely and reconfigured 0.017 to 0.021.
Okay, that's an important point that you're making here, Rajesh. Let's cross-verify with Siddharth as well. Siddharth, you do a lot of F&O trading yourself for clients and your organization. Would you be aware of the STT which is currently applicable, whether it's 5,000 or 1,700 as the finance bill proposes, or as what Rajesh Baheti is saying right now? Siddharth? Right.
Rajesh, if you're still there, so there are a lot of these 0.00 here, so it's kind of hard to get your head around. Is there, even from the 2017 number, the current proposed number, is it an increase or not?
Yes, from the old number of 2016, it's an increase, but the increase has already happened to 5,000 per crore. What they are proposing now is 2,100 per crore, assuming that the existing number is 1,700 per crore. When it's actually 5,000 per crore.
So it's if the so this has been passed, Rajesh. The finance bill is passed.
All right.
So this is an effective decrease, you're saying? Rajesh, are you there?
So, Prashant, as I understand from Rajesh, and we'll get that clarity from him, all he's saying is that there is some error in drafting the amendment. The earlier figure that has been put is probably incorrect, which is 2016 figure and not accounting for 2017 increased figure. And he's saying that probably the increase has happened, but over the 2017 figure. So only the versus figure that we are alluding to is probably the incorrect figure. But nonetheless, the amendment has been passed on increase in STT by that certain certain percentage on the last figure existing is what I gathered from Rajesh.
No,
but we need clarity.
Is this an effective decrease or increase is what I want to know.
I would presume that, if you look at it from an absolute basis by what is written in the finance bill, it would be a decrease. However, if the spirit of the law has to be followed, then it would be an increase from 5,000 per crore to a 25% jump over that would be around 60 to 50 rupees per crore.
Like he said, they do want to still increase it, but they've made an error in perhaps the number.
But guys, we pay taxes not on spirit but on the written word.
Yes.
So if the written word is what has been passed,
yes.
So they would, I mean, if the intent, as Rajesh also pointed out, is to increase, then I think...
Then it could be 25% on this.
On this. So, which means that then we will get a clarification. Our colleague Timsy, of course, is also getting, sort of exact lines from the finance ministry. Rajesh is back with us. Rajesh, I think we lost you there, a bit of a patchy line. So, effectively, this is a decrease and this will need to be clarified then because the intent is to hike, Rajesh. That's what you're saying?
Yeah, but the intent is to hike, but the number is already at 5,000, so the justification does not exist. Because in their own minds, they thought 2,100 was a good number.
No. Forget about justification. If the intent is to hike even from there has to be then a clarification after this, right? Because it's an effect.
Well, it can't be a clarification. There has to be a new amendment to the finance bill and it has to be passed because technically this has been passed by the Lok Sabha.
Okay, and
so
on
it
the
has
future,
to be...
this
yes,
is options.
on futures,
on
there is an
futures?
increase of 25%. There's no mistake there.
Okay, and if these are, forget about the sort of change that you're talking about, and presumably that will happen if the intent is to increase, how significant are these increases to your mind, Rajesh?
Well, they were significant, very significant in 2017. We don't think there's a case for increase, and it will be significant. And it will be detrimental to numbers in terms of volumes. The fact that STT has also been disallowed as an expense for anybody claiming capital gains. So I believe FPIs claim capital gains on their derivatives income. So this can't even be claimed as an expense. So it'll all be additional tax
Rajesh,
on their income.
But when it was increased by 3 times in 2017, since then to now, we have seen a multifold increase in volumes. Do you think an increase in STT would actually impede volumes?
Yes, it does. So last time why the volumes increased was when this increase was done to 5,000 from 1,700. A very significant change was also made that at the time of expiry, the premium was to be collected only on the expiry price of the options as against the strike plus premium, which used to be the case. So this kind of compensated for that expiry day problems that we used to have in terms of the tax being very, very high on all in-the-money options. So this increase was done to compensate for that.
Okay, fair enough. I think we'll leave it there. What we'll have to do is sort of get on the phone and off the air and sort of put this together, because this is a developing story, and as I think Rajesh is giving new information in terms of the prior figures which were already increased, and the latest notification does not account for that. So if the intent is to increase, we'll have to hear from the finance ministry, no less, in terms of all of this. Rajesh, thank you very much for joining us. Right. Good speaking with you. Nisha, over to you.
Yes, thanks so much, Prashant. That was a lot of clarity, but now there is a lot more clarification, as well as probably a new amendment draft by in terms of the finance bill that needs to be given by the finance ministry, and that's what we'll wait and watch out for. But there are a few other aspects of this finance bill that we are focusing on. One more important amendment that has been made, and this has been, remember, the ask price by the REITs and InvITs shareholders and the companies in the country. Because remember that in this finance bill, there was a new, the tax ambit was increased to the repayment of debt component of the distributed cash as part of REITs and InvITs. Now the amendment has given slight bit of dispensation. The debt repayment portion will deduct for the cost of acquisition. So if the shareholders were getting impacted, say by 2-3%, 3% of their total returns because of this tax being increased or ambit being increased. That will come down a little, but still it is going to be negative. Slight bit of dispensation. Keep that on the radar, but completely out of time on this edition of Business Lunch. More details on the finance bill, their understanding, amendments and the markets in mid-cap radar. Stay tuned for that.